Markets snap a six-day gaining streak. The Nifty fails to hold on to 26,000 with more than 40 stocks ending in the red. The market breadth favors declines and all sectoral indices close in the red as well.
New age companies in focus. Physics Wala lists at a 33% premium to its issue price, ends over 40%. The EdTech firm aims to turn profitable within the next 12 months.
Groww keeps growing. The stock jumps 90% above the issue price in what some call a rationality-defying bull run. CNBC-TV18 studies key metrics of India's #1 brokerage by customers for some answers.
And Day Street witnesses a flurry of block deals post-result season totaling $1 billion as key players like Mphasis, ITC, Paytm, Emcure Pharma and Zinca Logistics see pairing of stakes.
Hello and welcome to this edition of Markets Forward, your go-to show where we aim to get you snippets of all the day's crucial data points and the trading points, and of course prepare you for the next trading session. I'm Surabhi Upadhyay. With me is Manglam Malu. Hi, Manglam.
Good evening, Surabhi. You know, the way the market was, it seems like there's a magnet placed at around 25,800 and there's another one which is placed just around the 26,000 mark. Every time the market moves on in either direction towards that, gets moved towards the other direction, and that's exactly what took place today as well. If you look at the intraday chart of the Nifty as well, for a longish period, it was below that 25,900 mark. Thereafter saw a big recovery closer to the 25,960, 25,970 mark. As it moved towards 26,000, the other magnet came into action, and towards the end of trade, we ended around 25,900. Very happy day for all those who wrote the 25,900 straddle, because it was also the weekly options expiry, a straddle being a call and a put together, which is basically a trade made for no change from close to close mark from that strike, which is 25,900.
Absolutely. It's been trading within boundaries, and then this mark of 26,000, roughly 26,100, it's proving to be a bit of a jinx. But let's not get too negative, because you have to keep the global context in mind. This was India's performance, just about 0.5% lower, against a sea of red across Asian screens. You had the Nikkei falling over 3%. You had the Kospi falling over 3%. Hong Kong was down about 2%, so on and so forth. And this because the AI trade is feeling a bit jittery ahead of NVIDIA's numbers. So against a global somber equity backdrop, we fell only 0.5%. That's the headline. But I guess we have plenty lined up on the show.
A lot lined up on the show. Just to complete that point on AI, you know, when the world rallied because of AI, we didn't rally as much. Yeah. That time the question was, oh, FIs aren't in the Indian markets because we don't have any AI play out there. So we weren't participants in that party, and that's why we're not affected by the hangover of that party, so to say, as well. But let's tell you what we have for you on the show right now. Hormaz, as always, joins in with all the movers and shakers. D Street sees block deals worth $1 billion. Stocks like Mphasis, Paytm driving major transactions. Shares of Groww doubled since listing, so we'll get you an analysis on that one. Jefferies has initiated coverage on WeWork, so that was another stock which was a gainer. And last but not the least, we delve into all the key events you need to watch out for tomorrow's trading session. All right, with that, let's go across to Hormaz.
There are some interesting moves in today's session, but there were a couple of pockets that were sulking as well. Real estate was one such pocket, and almost every stock on the realty index was trading with losses in today's session, be it the bigger names, Sobha, Lodha, or even DLF for that matter. All of them ended 2 to 3% lower. Metals and IT were the two other pockets that were also sulking in today's session, with Vedanta, pull up Hindustan Zinc, LTI Mindtree, Tech Mahindra, larger names, smaller names, all of them 1 to 2% lower as well in today's trading session. And a lot of newsmakers today, of course, can't not talk about Groww. There's still another 8% added to today to its tally at the close of trade. With Fairchem Organics among the top gainers among the small cap names, Bombay Burma after that agreement termination with MSTC, and of course the two QSR names, Sapphire and Devyani International, after that latest decision from IRCTC with regards to opening of stores on railway stations, are doing fairly well in today's session. A lot of brokerage commentary coming out in today's session. Jefferies, the positive view on WeWork. And the stock did well, but still below its IPO price. GMR Airports also, Jefferies, another bullish note. The stock did well today, but MCX had an initiation from Axis Capital as a bullish note as well, but the stock didn't do as much, still ending just 1/3% lower in today's session. And lastly, stocks at 52-week highs today. At Federal Bank continuing to move higher. The mid-sized, smaller names doing well in the banking space. Bharti Airtel, another record for the stock today. And Sequent Scientific and TVS Srichakra also ending at 52-week highs today.
Okay, all right, Harmas, thanks very much for all that action. Let's get to our top story of the day. The end of earnings season has triggered a spate of block deals on the street, with 5 major transactions mopping up over $1 billion. This includes names like Memphis, Paytm and ITC, just to name a few, seeing promoters as well as investors sparing stakes. Vivek is here with more details on all these major transactions. Vivek?
Well, thank you so much for that. So essentially what has transpired in just the first half hour of trade, or even earlier than that, we've actually seen over $1 billion just via block deals actually getting executed. Now, quite a few large blocks as well. The first one, of course, being Emphasis. Yesterday afternoon, we told you about how there was likely going to be a very large block deal coming in from, the promoter entity, which is a private equity, Blackstone. 4,600 crore, a 6-month lock-in for that particular name. Paytm, again, quite a large block deal, 1,600 crores worth of shares. Saif Partners as well as Elevation Capital, a 2-month lock-in for that particular name. Emcure Pharma, again, here it's a private equity. Bain Capital exited, close to 500 crore worth of equity. 3-month lock-in for this particular name. Blackbuck or Zinca Logistics, a smaller block deal of close to 240 crore. Clutch of promoters, making a partial exit. Lockup of close to a year. And ITC, this particular name, while we don't have the exact details of who exactly sold, but last couple of days, we've seen high volume-based activity in this particular name. A block deal today valued at a little over 1,900 crores is what transpired. So totally, almost 8,800 or close to $1 billion worth of block deals is what we've seen in the session today. And what we understand is that quite a few large blocks are in the offing as well.
All right, we take that point, Vivek. Thanks a lot for that. Let's go across to our guests now. Jay Bala of cashthechaos.com joins in. Mayuresh Joshi also on our show from William O'Neill. Jay, good evening. On the Nifty itself, we've been talking about how it's a range, but the good part is that this range is, seeing an upward grind, so to say, or maybe, what do you call it, an upward consolidation. Do you see this grind continue, or at some point there would be a breakout?
Hi, Malam. Good point. Actually, the number of times the markets have been testing 26,000 and 26,100 mark, the markets are getting closer, the resistance becomes weaker. For me, what you're pointing out is absolutely correct. It looks like a bullish upward consolidation. And besides the Nifty itself, you had Nifty Midcap clock fresh record highs and Nifty Bank clock fresh record highs. So I believe it's just a matter of time before the Nifty also scales fresh record highs. But it's not without some amount of caution. You can also flip it and look at it the other way. The markets have been struggling around the 26,000, 26,100 mark about 5-6 times now. So some amount of caution is required. As long as the Nifty is trading about 25,318, I still believe the probability of market taking out fresh all-time highs is higher than the markets going lower.
Okay, all right, got that. Jay, stay on. We'll have more questions for you in just a bit. But let's also start talking stocks. Shares of WeWork India rallied after Jefferies initiated coverage with a buy rating. The brokerage firm called for nearly 30% upside on the stock, driven by a strong set of structural tailwinds. This includes WeWork's market leadership in India and premium positioning, among other factors. Sonal is here with more details. Sonal.
Well, yes, the stock is buzzing in trade, but do remember it is still below its listing price. The stock is on our radar because Jefferies has initiated coverage on the stock with a buy rating, and the target price is 790 rupees a share. Now, do remember it is India's largest flexible workspace solutions provider, which is by revenues in the country and in the listed space as well, of course. At 17% CAGR, Jefferies says flexible workspace stock is growing at 2 times the pace of the office stock. So basically, co-working space sector in general is growing faster than the commercial space, and the total revenue CAGR of 22% for this company over the last 2 financial years was driven by a combination of 2 things. First, they could increase the rentals, that's the average rental per unit, and also because of demand for flex office space grew considerably, which contributed around 66% of the total growth. The operating leverage led to adjusted EBITDA to grow as well from 14.4% to 19.2%, which came by in FY25. And they expect this trend to continue as well. So basis IGAP accounting, they expect the revenue CAGR to be around 22% and EBITDA CAGR to come in at 28% for the next 3 fiscal years. And also the capex cost, which is coming currently per desk, is at 1,35,000. This implies that going forward, the capex could be around 250 to 300 crore rupees in terms of expansion. Do they have that cash? They have been continuously improving that number. They already saw cash flow generation of 300 crore rupees in the last 3 fiscal. They've been able to reduce debt with the IPO proceeds, and Jefferies believes this is a trend which would continue going forward as well.
Okay, all right. Got that, Sonal. Thanks very much. So we, of course, have Jay with us. Also joining in the conversation is Mayuresh Joshi. Mayuresh, it's been really the season of big listings and what stocks have done even after listings, right? So I think a large part of our conversation is going to be geared towards these stocks. Let's start with WeWork. I mean, what do you think of it? The business, the rationale that Jefferies has now given out, and whether it merits a buy?
Afternoon, Surabhi. So I think if you probably look at how the EBITDA margins at a central level have probably played out for WeWork, if I'm not mistaken, I think it's steady state. So if you look at a year-on-year basis, it's almost at 27.5% as we speak. In terms of the work desk additions that they've probably done, I think there has been a significant additions that they probably achieved at the end of Q2, where they've added more than 20,000 odd desks. And what really this has done is that the overall same center sale growth has actually gone higher, because occupancy is now stand close to 84% across 59 growth centers that they operate out of. And therefore, I think as the center improvement probably takes place, as occupancy levels remain stable and consistent, the expectations in terms of a stable show on the margin performance and increasing as the overall space numbers start increasing, including the desk numbers, that should probably start reflecting in better numbers going forward. So yeah, I think a strong move, how Q3 numbers play out is going to be extremely critical for the stock.
Have you done a comparative analysis, Mayuresh, on WeWork with Office and SmartWorks, the others that recently listed?
Yes, Mangalam. And again, I think the kind of dominance in terms of the first mover advantage that WeWork probably has probably still plays out. But even in the case of AWFIS, I think the expectation largely is that as a domain unit, the expectations of more centers coming in across the length and breadth of the country will probably start working in its favor. And that dynamics is obviously going to play in terms of better revenue numbers, better margins, as I said, with occupancies probably starting to inch higher for newer centers that come in. And therefore, for existing centers, Mangalam, I think the like-to-like comparison becomes far more saner, because with new growth centers coming through, the occupancies will take some element of time. With a steady state base that as a comparison element for AWFIS and WeWorks, I think both look equally strong in terms of core dynamics that they're probably posting.
Got that, take that point. But, none as big as the kind of move that we've seen in groww. Just 3 or 4 days into listing, and the stock has nearly doubled from its issue price, up 10% today as well. The broker now commands a market cap of over 1 lakh crore rupees. But is this valuation justified? And are there any other comparables that we have versus groww after this up move that we've seen in groww? Hormaz Fatakia joins in with a deep dive. Hormaz.
Well, if you are a cricket fan, you'd remember the late Dean Jones's very famous remark: every time someone hit a youth six, he used to say, going, going, gone. Now, however, this latest listing on Dalal Street has been growing and growing some more, at least in terms of stock price. Now, it's been 5 days since groww listed, and the stock has nearly doubled from its IPO price of $100. But how does this latest Dalal Street entrant stack up when it compared to some of its listed and unlisted peers? Now, on the revenue front, grow's top line is lower than its peers like Angel One and Zerodha. Now, active clients for groww are the highest for any platform, and therefore it stacks well above the other two names. But when it comes to the average revenue per user, or the ARPU, that is well below Angel One and even lower compared to Zerodha, whose ARPU is well above 10,000 rupees. But can groww play catch up with its peers going forward? Now, the management expects its top line to grow between 25 to 30% and costs to grow between 15 to 20% over the next few years. Basis that, if we take a 5-year projection, grow's revenues could go up to 14,500 crore rupees, its margins from 63% could grow up to 80%, and its net profit from the 1,800 crores currently could touch levels of 8,500 crore rupees. Now, this is an FY30 projection, assuming that groww continues to grow at the pace that the management has guided for. Now, when we take a look at the PEG ratio, or the price to earnings growth for Groww, that comes up to 1.63. Now, that is based on a 37% profit CAGR, and it's based on its FY25 EPS of around 3 rupees. Now, while Groww may be lagging its peers currently on certain aspects, it has surpassed them all when it compares to its value. Now, at the highest point of the day, Groww was valued at well over 1.1 lakh crore rupees, which is nearly the sum total of Angel One, Motilal Oswal and Nuvama Wealth put together. The management spoke to us earlier, and they spoke about how they plan on growing the MTF book, and that the MTF business will become bigger than the personal loan business going forward. Now, with a healthy growth guidance, expansion to newer businesses, Groww's ARPUs may subsequently also see some uptick as clients in different verticals begin to increase. Now, whether that can help the company catch up with peers, only time will tell. But for now, the next major growth trigger for Groww comes on Friday, when it reports its quarterly results, which will be its first after its listing. Now, that's Groww for you. It has made quite some noise in the first few days of being a public company, and the shareholders would only hope that the stock continues to hit it out of the park going forward as well.
Okay, indeed, Groww has been hitting it out of the park, Armas. Thank you so much for that. Let's go back to Mayuresh on this. Mayuresh, I mean, gravity-defying moves, right? What do you say when the stock moves from 100 to nearly 200 in what, 5 trading sessions? So, what's the sense on valuations? Should you wait for a dip, buy, not buy, just stay away completely? What's the advice?
No. So somebody just pointed out, Survi, that with the rise that we've seen today, Grow's market cap has grown more than BSE. I've not double checked that, but if that is the case, a market participant having a market cap more than the overall exchange valuation itself. So I think that is something that we need to comprehend about. But again, I think the numbers that Horma spoke about, I think FY30 is a long way away. I think what kind of changes happen in that interim, how much competition plays its part, are there any regulatory changes in that interim that we see, are there going to be technological advancements that are probably expected to come through as well, are all unknowns at this point of time. And therefore, with these unknown variables, to peg a number on FY30 probably looks a little bit far-fetched in my opinion. Having said that, from a valuation perspective, obviously I think stretched as we speak, because this is now factoring in the best to come over the next few years. And as I said, I think the statement probably holds true that the market cap has become more than the exchange, that is BSE.
Right. So you take that point, Mayuresh, 1,15,000 crores is BSE's market cap, 1,16,000 crore is Grow's market cap. It sounds great as a headline-grabbing statement, but it will be very interesting to see where it goes as well, because both have their own pros and cons. BSE does not have the entire market's market share, but Groww is a market leader. Take your point entirely, because I remember when DMart had listed and the kind of valuations that DMart traded at, the market cap of DMart was actually a lot higher than a lot of these FMCG companies put together as well. So that was, one was wondering whether the FMCG companies that a retailer sells or not, is their market cap justified or not. The important part, however, one needs to keep in mind is that early days of an IPO, so a large part of the shares are actually locked. So the impact cost on either side would be fairly exaggerated, and that's something that we're seeing in Groww as well. The impact cost would be exaggerated by virtue of the fact that only currently 7.3% of the equity of Groww is available for trade. So if you translate that into market cap, that amounts to about 8,300 crores of shares available for trade, as against a market cap of 1,15,000. Take your point, Mayuresh. Final question to Jay Bala. Jay, on BSE, the stock's been doing okay. Is there a chartical call that you have?
See, I've liked MCX more than BSE, but that is not to state that BSE is not looking good on the charts. But I still anticipate fresh record highs to come through for BSE. The June high it saw, that probably going to get taken out for BSE Limited. I would anticipate somewhere about 3,100 to 3,200. But it's the final leg of the move, in my opinion. So, exercise a bit of caution, and allocation should be sensible.
All right, gentlemen. Thank you so much for that. Take a short break. Come back and more on the top corporate voices that joined us on the channel today. Also, the key events to watch for tomorrow. Well, we've been talking about the markets here on Markets Forward. Let's take a look at some of the global opinions coming in for India. The founder of Goldilocks Global, Gautam Shah, told CNBC-TV18 that the momentum in PSU banks is far from over. He said that he expects a 15 to 20% upside in the top names, including major NBFCs. The global names that were bullish on India have to be Morgan Stanley. So we'll hear out Citi's Drew Pettit as well, who said that we are in an AI boom, not an AI bubble, and added that AI trade isn't fueled by excessive leverage. On India, he said that while earnings and fundamentals remain strong, Indian valuations have run ahead of it. So here are Gautam Shah's view and the global view coming in.
Our last two interactions, I did speak about PSU banks being the poster boys. I think they've had a phenomenal run if you look at the top 4 or 5 names. And I think the PSU banking index is going to do much, much bigger things, even from current levels. The private banks will do well, but then it's going to be in line with the Nifty returns. But the real trade is with PSU banking, and the overall financial space, NBFCs, housing finance companies are all likely to do well and take this market higher. Then if you look at the top PSU banks, even at current levels, including the top PSU bank there, I think there is potential for 15 to 20% upside, something which I don't see from any other financial stocks. And I think the top NBFCs also we've liked. And third in the pecking order would be the housing finance companies, which I think is a trade on what RBI has done and the pickup in the economy. So that would be my pecking order: PSU banks, NBFCs, and housing finance companies.
India is a market that we took down from overweight to market weight in a global context. What we're actually looking for is not necessarily the anti-AI trade. It is the AI at a better price trade, which you're starting to see in China, what you're seeing in international markets, and honestly still in some pockets of the United States. So while AI may be questioned, I would say a little bit more frequently as of late, it's still a trade that structurally we like. We just want to get it at a better value than you get in broader indices.
Okay, so that is the voice coming in from Citi earlier today. Let's move on to the corporate voices of the day. Physics Wala made a stellar debut on the bourses today. Stock was up 40% on day one over its issue price. The company's co-founder, Prateek Maheshwari, told CNBC-TV18 that the edtech firm hopes to turn profitable within a year and grow around 30% over the next few years. He also added that the business will remain largely online, which currently accounts for 52% of total revenue.
Solar energy player MB Photovoltaics also joined CNBC-TV18 on their listing day today. They said they'll spend about 5,500 crore rupees on expansion over the next 18 months. They're planning to add 6 gigawatts of solar cell modules, which could bring about 5,000 crore rupees of revenue once completed. This entire 5,500 crore worth capex, and the margins could be between 30 to 33%.
Kaynes Technologies CEO told CNBC-TV18 that the company's existing business segments remain strong and expects 1,000 crore rupees from the OSAT facility business. That's outsourced semiconductor assembly and testing. So they're expecting 1,000 crores from OSAT revenues by FY27. Also adds that 60% of the firm's OSAT capacity has already been tied up with clients. He also confirmed that the company's new PCB manufacturing facility is on track to be completed by the end of this year.
All right, with that, let's let you some key market events to watch out for. Gaurav Javalkar with us to tell you what's important tomorrow.
Well, as for tomorrow, if you look at stock action, we do not have any stocks specifically, but let's not forget about BFSI and IT segment. And the reason being that FM is on a spree for pre-budget consultation and meeting industrial stakeholders, where she will be meeting the stakeholders from financial services and insurance, and at the same time from information technology. Other than that, let's also not forget about the IPO market. We have seen the IPO market being hot for the last few days. Tomorrow is also a listing of Tenneco Clean Air. And if you look at the subscription data, we have seen the IPO issue was oversubscribed almost 62 times, with QIB subscription as high as 175 times. So let's see how the listing goes for this company. Apart from that, we are also getting new IPO, which will be Excelsoft Technologies. The company is coming up with an IPO to raise around 500 crores, and the price band is set at 114 to 120 rupees. And lastly, from the global markets, let's not forget about the US FOMC meetings minutes. And this is important given that we've already seen the dynamic nature of the market, and now there is a set of new investors who believe that there won't be any rate cut in December. So definitely we will be watching out on all these events for the day tomorrow.
Right, Gaurav, thank you so much for setting us up for trade tomorrow. With that, we wrap up on this edition of Markets Forward. Stay tuned to CNBC-TV18. More news and updates on the other side.